Today on RoxomTV News, Iran has a new supreme leader, the son of the last one, because nothing says stable transition of power quite like a family promotion during a regional war. Oil rockets toward $120 a barrel, and suddenly the global economy is discovering that wars and energy choke points tend to get very expensive very quickly. Across global markets, about $6 trillion in stock value disappears, and in a twist that made traders blink twice, even bonds, the asset that's supposed to be the safe haven, started falling too. In Nepal, a former rapper is on track to become the prime minister, proving once again that politics in 2026 sometimes looks suspiciously like the plot of a Netflix series. And actor Terrence says Bitcoin could be wiped out with the push of a button, which is interesting because the entire design of Bitcoin is that no one actually has that button to push. I'm your host, Hank Hudson. Bitcoin is currently trading around $69,000, and that brings us to our top story of the morning, so let's get into it. As Iran has a new supreme leader, and it's a familiar last name, Mojtaba Khamenei. The 56-year-old son of the recently killed Supreme Leader Ayatollah Ali Khamenei has been selected as Iran's third Supreme Leader since the 1979 revolution. The decision came from the Assembly of Experts after what insiders described as intense pressure from the Islamic Revolutionary Guard Corps, or the IRGC. Now, the vote reportedly happened online, and several members privately described the process as unnatural, which is diplomatic language for this was probably decided before the meeting even started. Mojtaba has never held elected office and has never delivered a public speech before, but U.S. diplomatic cables previously described him as the power behind the robes, a man who has spent decades quietly building influence inside Iran's security apparatus. Hours after the announcement, Iran launched new attacks on Israeli and Gulf targets, and oil markets reacted instantly. Brent crude briefly surged to nearly $120 a barrel before settling around $104, marking one of the biggest single-day spikes in futures trading's history. Gas prices in the United States have already climbed about 16% in a week, and current president, Donald Trump, has described the surge as a very small price to pay, while critics argue that rising energy costs will hit consumers far beyond the battlefield. And for those of you watching at home, the takeaway here is pretty simple. Leadership transitions in countries sitting on major oil reserves tend to move global markets almost immediately. And when that transition happens during an active regional conflict, the ripple effects show up everywhere, from stock markets to the gas pump. Across the Atlantic, over in London town, where the G7 finance ministers are meeting this week, global leaders are now scrambling to calm oil markets that have been jumping around like a caffeinated kangaroo. Officials are discussing a coordinated release of emergency oil reserves through the International Energy Agency, a move designed to push more crude onto the market and hopefully cool prices. The last time something like this happened was back in 2022 after Russia invaded Ukraine. The United States still holds roughly 400 million barrels in its strategic petroleum reserve, and that sounds like a lot, but the reserve can hold about 700 million barrels at full capacity, meaning it's already been significantly drawn down over the past few years. China has also signaled it may take necessary measures to protect its own energy supply, which is usually diplomatic shorthand for "we're watching this very closely." But here's the problem policymakers are currently wrestling with. The current shock in oil prices isn't purely about supply numbers on paper. It's about a critical shipping choke point in the Middle East being effectively shut, and nobody knows how long that disruption will last. Financial markets reacted immediately to the news when reports of this meeting surfaced, pulling Brent crude back from 120 to around that 104, 105 mark. And for those of you watching at home, this matters because strategic reserves can stabilize markets temporarily, but they don't fix underlying geopolitical conflicts. And when oil markets are reacting to war headlines in real time, even small developments can move prices that affect the entire global economy. Over in Oslo, Norway, police are investigating a small explosion outside the United States Embassy early Sunday morning. Authorities say the blast caused minor damage, but fortunately no injuries, which is about the best possible outcome when something explodes outside a diplomatic compound. Police say it's natural to view this in the context of the current security situation, and they are treating it as a possible deliberate attack on the embassy. Images released by investigators show a single suspect dressed entirely in black, carrying a backpack, which unfortunately is not exactly a rare fashion choice in Northern Europe. No arrests have been made yet, and officials have not confirmed a motive, but the broader backdrop here matters. Anti-war protests have recently spread across several European capitals as tensions in the Middle East escalate, and incidents like this tend to amplify the sense that America's political and military decisions are being felt well beyond Washington. And for those of you at home, that bigger issue is that diplomatic facilities are often the first visible targets when global tensions spill into public anger. And when embassies start showing up in police investigations instead of tourist photos, it's usually a signal that geopolitical stress is moving from headlines and into real life. Over in the Ukraine, rescuers spent the weekend digging through rubble after a Russian missile slammed into a residential apartment building overnight in Kharkiv. The strike killed at least 10 people, including 2 children, and injured more than a dozen others after a ballistics missile hit the 5-story building in Ukraine's second largest city. Emergency crews have been combing through the debris looking for survivors, with officials warning that more victims could still be trapped underneath the collapsed structure. Ukraine's President Volodymyr Zelensky said Russia launched 29 missiles and roughly 480 drones during the overnight assault, many of them Iranian-designed Shahed drones. Ukrainian air defenses reportedly intercepted the majority of those drones and about 19 of the missiles. But several still got through, damaging energy infrastructure in Kiev and rail lines in other regions, while nearby Poland scrambled aircraft to protect its own airspace as a precaution. And the timing here, well, it's notable. Peace negotiations that had been slowly inching forward have stalled as global attention shifts toward escalating conflicts in the Middle East. And for those of you watching at home, the reality here is that when one major war dominates headlines, another ongoing war rarely pauses out of courtesy. And for the people living in cities like Kharkiv, the danger continues whether the world is watching closely or not. Over in Nepal, a political movement led by a former rapper is on track for a landslide victory in the country's parliamentary elections. Balendra Shah, a rapper turned politician and former mayor of Kathmandu, leads the Rashtriya Swatantra Party, or National Independent Party, which appears poised to dominate parliament. Now, the party has already secured more than 100 of 165 directly elected seats in the lower house and is leading in several others as counting continues. Now, that's a remarkable rise for a political party that only formed 4 years ago. And its momentum comes after youth-led protests last year that toppled the long-standing political leadership, fueled by anger over corruption, poor governance, and a government attempt to ban social media. Those protests ultimately forced out former Prime Minister Khadga Prasad Ali, and if current results hold, Shah's party will have enough seats to form the next government. And over on Wall Street, stress is spreading through the private credit market as a massive corner of finance that usually operates quietly behind the scenes. You see, BlackRock recently capped withdrawals from its $26 billion HPS corporate lending fund after investors requested about $1.2 billion worth of redemptions. And we're going to get back to this story in just a second, gang, because my prompter just jumped, and I want to make sure to tell all of you about what is going on with that one. And I think we're going to have to take a break here because we're kind of out of the way right now. So we're going to come back in with this story and more when we return in just a bit. We're going to be joined by our special guest of the hour to make sense of the madness. So stay tuned. RoxomTV News is coming your way right after this.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to RoxomTV News. We're going to continue with the story we started before break, but it's a live show, technical difficulties, it happens. So let's get back into it because over on Wall Street, I should say, stress is spreading through the private credit market as a massive corner of finance that usually operates quietly behind the scenes. You see, BlackRock recently capped withdrawals from its $26 billion HPS corporate lending fund after investors requested about $1.2 billion in redemptions. Now, the firm limited payouts to roughly 5% of assets, leaving many investors unable to access their money immediately. At nearly the same time, Blue Owl Capital halted withdrawals entirely from one of its retail private credit funds, saying that investors will instead receive capital gradually as loans are repaid or assets are sold. Markets reacted quickly to the news. Shares of major alternative asset managers, including KKR, Apollo, Ares, Carlyle, and TPG, fell roughly 4 to 6% in a single trading session. And for those of you who are tuning in from home, this episode highlights a basic feature of traditional finance. When stress hits certain investment funds, managers can restrict withdrawals to prevent a broader collapse. And then suddenly everyone remembers that liquidity, in fact, matters. All right, joining me this morning to talk about this story and others, one of our good friends of the program. We've had him on before, and he's back joining us again. I want to welcome the CEO of Lightning Ventures and Thunder Funder, Mike the Moose Jarmoose, everybody. Mike, welcome back to the show. Always great seeing you. How are you this morning?
Awesome, Hank. Thanks for having me. And on a day like today, there's so many crazy stories here. I love what we're talking about. It's never a dull moment.
I know, for better or worse. For news, it's great. For the sanity of the global populace, probably less so. But let's chat about it because, like you said, it makes good TV fodder. So I want to talk on this most recent story here, Mark. Since the war began, we've seen about $6 trillion in global stock market value has disappeared, even bonds, which usually go up during crises. So I got a question for you. When you see markets like this, Mike, and that they're reacting the way they are, what is that telling you about how nervous investors are right now? Because the geopolitical sphere right now in the world is feeling a little shaky. What's your beat on the situation right now?
Well, everyone's running to cash. And actually, for the past few years, we joke in Bitcoin, holding cash outperformed your Bitcoin holdings handedly over the past few years. And it's kind of impossible to guess. I was lucky enough to ride some of those metals on the way up, and then we saw that historic crash. Silver was down. I can't remember what it was. Was it 30% in a day? And we just saw an epic end to an Eiffel Tower type of move in the metals markets. And then if you were smart enough to roll that into oil before it started on that Saturday. And then yesterday, I mean, oil opened up at, I want to say it was over, was it 120 a barrel at the peak?
Yeah.
It was just absolutely nuts, and it's almost impossible to tell. And it's, what's interesting now, we always talk about the decoupling, and you have kind of pretty much everything down except Bitcoin. And that's kind of cool. But yeah, investors, they want their money back, and liquidity matters in a crisis situation. I think that's just what we're seeing now.
Yeah, absolutely. And Mike, something I'd like to kind of talk about here is you mentioned like we've seen some pretty big swings from the precious metals, gold and silver that we hadn't really seen before. I think you said silver was even like down 30% in a day. And we know those are supposed to be these safe haven assets that people go to in times of fear, right? And you mentioned Bitcoin hasn't really been experiencing the same downside volatility during this time. Obviously, we've seen it take quite the tumble since the 120s back in October. But with that being said, seeing that we're seeing these safe haven assets be pretty tumultuous with their price movements during all of this craziness in the world, and Bitcoin seems to be relatively stable by comparison. Do you think this is one of those moments where it's going to get traditional finance kind of maybe looking toward Bitcoin's way a little bit more? Because they're like, hey, we've been painting this thing as volatile for almost 20 years now, but comparative to what are the things that we thought were safe havens, it really hasn't been. Do you think this could be one of those moments where we're going to see that type of change just because of what we're seeing in the market right now, and it might open some people's eyes?
Well, we always say we're so early, right? I mean, that's
Yeah.
the Bitcoin phrase. And I just think really TradFi still doesn't actually know what to do with Bitcoin. And
Hmm.
the Iran strikes started, I mean, Bitcoin could have nuked. Bitcoin could have
Yeah.
nuked on that Saturday down to 50,000 and didn't, and it was quick to recover. A lot of people say kind of Bitcoin leads the way, right? It's the only
Hmm.
true, 24-hour market, and a lot of times it's the first down and it's the first up, and it kind of leads the way. And in this environment, you have treasuries, typical safe haven assets are even also selling off. Silver is more of an industrial metal. It's not really a safe haven,
Hmm.
but it's more of a
Sure.
safe haven than say, than equities and other things. And, people, it's kind of like the everything sell off. But it's nice
Hmm.
to see Bitcoin kind of bucking the trend and going the other way. And, that recovery yesterday was super impressive. And on a day like today,
Hmm.
it's performing really well. And maybe eventually
Yeah.
what we all thought, which was Bitcoin should do well during times of uncertainty and times of war and all of this. And
Yeah.
maybe that's just what we're finally seeing now, 10 plus years later.
Yeah, if they start firing up that money printer for reasons of perpetuating this war further, I know those missiles all cost like 2 million bucks each or something crazy. In theory, this would be good for Bitcoin. And Mike, you've been around the Bitcoin scene for a long time. What do you feel like is different from this time with the chaos we've seen compared to Bitcoin in previous years? Do you feel like that institutional foundation that's kind of made its way into the ecosystem the last 2 years is really helping hold the line right now? And maybe that's been a big difference of Bitcoin's foundation right now as we had seen to previous years with those really wild swings, because we've experienced about like a 50, I think it was maybe 54% drawback at its peak, when in the past, we've had 70, I think upwards of 90 something percent. So does this feel any different to you compared to some of the drawbacks and years you've seen previously during quote unquote, bear markets?
Well, before, we used to call it the BitMEX scam wick.
Oh.
And that was before ETFs and before the paper Bitcoin and everything that you had there. You
Hmm.
just had that big, that epic dump on BitMEX and just wiped everyone out with the liquidity hunting and then back up. And it's a little bit different now. It's a household name. I mean, Bitcoin is in every portfolio. You have things, like the BlackRock product and everything that MicroStrategy is doing. I think JP Morgan's coming out with sort of a private, interest bearing Bitcoin backed whatever scam they're going to roll out. And now you
Hmm.
have, it's kind of it's a household name, but with that comes a lot of the games, the derivative products, the naked short selling, the things that we've kind of accused and they've thought that they were doing with the silver and gold markets for years of price
Hmm.
suppression. Now they can play those games with Bitcoin. And when you read through, when you read the tape, people are accumulating. BlackRock, everyone
Hmm.
I know with substantial wealth is just buying Bitcoin. And I
Hmm.
think really the only people selling Bitcoin is kind of scared retail money, are kind of
Yeah.
getting shaken out here. And, is it a slow
Hmm.
correction to the upside or is it a violent move to the upside? Either way, the fact that Bitcoin's not getting cheesed right here on a day like today
Hmm.
is definitely a good sign.
Yeah, I mean, it seems like with retail selling, Michael Saylor seems to be more than happy to pick it up at a discount compared to his relative cost for Bitcoin. I think it used to be like 70 something now, but he's bringing that cost basis lower. And another thing we're seeing with a lot of these conflicts, specifically, we saw it in Venezuela, it was a big topic, and of course, the Middle East, we're seeing oil prices really react to all of this geopolitical uncertainty. You mentioned, we saw it jump to $120 a barrel, which is crazy. I'm never driving again. How do you think these oil prices are going to affect the rest of the markets going forward? Do you think people are going to be looking to oil more closely, maybe pulling some out of gold, silver, maybe even Bitcoin, putting into oil? What do you think those effects of these increased oil prices are going to have, just not just on the markets and investors, but on everyday people out there?
Well, I think transportation is actually 20% of the overall economy, and
Oof.
that's everything.
Yeah.
That's your FedEx deliveries, that's your Amazon truck. I mean, how many thousands of products are made with petroleum? that is not going to be good for the consumer. I mean, we know the consumer is already price conscious. You see stocks and things like
Hmm.
Ross Stores and Walmart, those stocks were hitting all-time highs, while a lot of the luxury isn't, so you've already got a price conscious consumer. You've got the midterm elections right around the corner, and any sort of headway that was made with inflation and getting things under control, which transportation's a big part of that, is kind of being
Hmm.
reversed here. I don't really see it as like a momentum trade for retail. I think that retail kind of
Hmm.
FOMOs into Bitcoin. I think maybe they would
Yeah.
FOMO into the metals or Nvidia or the semiconductors or things like that. I don't really know if you FOMO into oil, but
Yeah.
it's kind of funny if you drive a car and you look at gas prices, because the price of oil goes down, okay, and it takes a good week or two for really the price of the pump. But the minute oil starts spiking, I mean, the next day you see it on the sign at your local
Yeah.
gas station, and it's
Yeah.
really gonna affect people on a day-to-day basis. Thankfully, got my Tesla. I'm a new Tesla owner, so it
Nice.
only somewhat affects me, but even still, it absolutely does. And hopefully it doesn't go much higher. I mean, what was the record? I can't remember. Do you remember? I think Bush was
I don't
president.
know.
I mean, I thought we had 140, $160 oil, maybe
Oof.
in '08 or so during the great financial crisis with with
Yeah. That
it
that
was up
wouldn't
there
surprise me. I
before.
don't know. Yeah, I just know California prices, and when it starts creeping above that $5 a gallon mark, that's when people I think are really starting to pay attention. And I've seen it as high in like LA is like 7 before. And I'm glad you got a Tesla, but word to the wise is someone who lives in the Bay, make sure you get one of those stickers that said, "I bought this before Elon," even if it wasn't or something. Elon joined Doge. I don't want your car getting broken into. People do that here. They're crazy. And we're seeing all this chaos. We're seeing markets falling right now. We're seeing gas prices are about to explode. Inflation's rising. The government's potentially printing more money during these conflicts, obviously, to fund them. So, my question for you, Mike, is do you feel like maybe this is exactly the type of environment that we need that would, get people to be paying more attention to Bitcoin as an alternative option? Do you think this is maybe like, do we need, because like people are feeling it at home, right? And you and I know the human condition only reacts when it hits us personally. Do you think then with these increasing oil prices, cost of living, wars, uncertainty, etc., people might start looking to alternative options like Bitcoin more than before? I mean, this could end up being another big catalyst. What do you think?
I think that, unfortunately, as far as retail goes, if you need money, Bitcoin's probably going to be the first thing that goes. But I don't
Yeah.
think that Bitcoin is really dominated by retail at this point anymore. I don't really think it
Yeah.
matters. I don't think that these large ETF, large institutions that are accumulating, or people like Sailor or Strive, or the companies that have all sorts of strategies for accumulating, I don't think that they're going to get shaken out as long as they
Hmm.
use intelligent leverage with whatever they're
Right.
doing. But as far as retail goes, I mean, what gets sold first, right? Maybe you sell Pepe and Dogecoin first, but
Yeah.
then
God willing.
eventually you're probably going to sell Bitcoin when you need to. So
Right.
I think it's, if the economy is in trouble and people are pinched and Bitcoin is a part of their portfolio, I think it's probably going to
Hmm.
be the first to go. And it's a slow bleed. Like, it takes a lot to go down the Jekyll Island rabbit hole and get on that
Right.
page and really look at the M2 chart and start overlaying it. Like, that's not a 1 day thing, So
Right.
I don't really know what it would take. I mean, is there going to be a large campaign that's like, if you don't agree with wars, you should opt out with Bitcoin, and sort of have like a,
Yeah.
a 60s revolution hippie movement today? That might get some people thinking twice. But
Not a bad idea.
unfortunately, if they need money, they're probably going to sell Bitcoin. And if the printer go burr again, as it always does, I don't know if that's
Hmm.
really going to move Aunt Mary and Uncle Bob into saying,
Yeah.
F the dollar, especially when they're watching how volatile Bitcoin really is. Number go
Hmm.
up is the best marketing strategy. It always has been. So
Yeah.
once we get some wind in our sails there, it might be a different story.
Yeah, I could see this being a catalyst for that, though, right? Like for me, all you need is the right TikToker or influencer who starts that narrative, like you mentioned, like if we could get that, Bitcoin narrative going, but Bitcoin doesn't have a PR company, right? So I don't know. I think we're one big candle movement away, especially at these lower prices where it's a little bit easier to move the needle a little bit to maybe the next bit, because people are feeling it. People are dissatisfied right now. And I wouldn't be surprised if we saw something, but I'm certainly no prognosticator or future teller, so only time will tell. We're going to take a quick break here, gang, but when we're back, Mike and I are going to return to talk about more of today's breaking story, so stay tuned. Roxom TV News coming right back after this. Welcome back to Roxom TV News. So Bitcoin has passed one of the most important milestones in its entire history. It's officially crossed 20 million coins in circulation, leaving only about 1 million Bitcoin left to be mined out of the fixed 21 million supply cap. That means more than 95% of all Bitcoin that will ever exist has already been issued, and new supply is now extremely limited. You see, after the April 2024 halving, the block reward dropped to 3.125 Bitcoin per block, meaning only about 450 new Bitcoin enter circulation each day worldwide. The final fraction of a Bitcoin isn't expected to be mined until around the year 2140. And for those of you watching at home, this milestone highlights one of Bitcoin's defining features. Unlike traditional currencies where supply can expand whenever governments decide it should, Bitcoin's issuance schedule is written directly into the code. And with each halving cycle, the remaining supply becomes slower and harder to produce. In London's financial markets, British politician Nigel Farage is making a new bet tied to Bitcoin, though not exactly in the way you might expect. You see, Farage recently invested about £215,000 in a London-listed Bitcoin treasury company called Stack BTC, alongside crypto infrastructure firm blockchain.com. Now, the investment gives Farage roughly a 6% stake in the small public company. Stack BTC trades on the Aquis exchange and currently holds about 21 Bitcoin, worth a little over £1 million. The firm's strategy is to acquire cash-flowing businesses and reinvest profits into accumulating Bitcoin over time. The company is chaired by former UK Chancellor Kwasi Kwarteng, who welcomed the investment. Kwarteng said, and I quote, "We are delighted to welcome Nigel Farage and blockchain.com as strategic investors in Stack." And for those of you watching at home, the interesting twist here is that Farage didn't buy Bitcoin directly. He bought shares in a company that buys Bitcoin, which raises an obvious question many Bitcoin advocates like to ask. If the goal is exposure to Bitcoin, why not simply hold the asset itself? Over in Hollywood and across social media today, actor Terrence Howard is drawing attention for his latest take on Bitcoin. Speaking on the PBD podcast with Patrick David Bett, Howard said he believes Bitcoin could be wiped out with the push of a button somewhere. Let's take a look.
Bitcoin is going to die. I don't mess with it.
You think Bitcoin is going to die?
Oh,
you touch nothing with crypto.
I don't touch it.
Tell me why you think it's going to.
Well, I just got a call from somebody a couple of days ago and said, "Hey, if you got 25 million, you can make 75,000. I just want to put it inside of an account to do some stuff." And this is a friend of mine, and I was like, "Do you realize that Bitcoin is still based on fiat? It's still and because the dollar is decreasing in its value, because the uncertainty of war around." Nobody wants their money in something that can be wiped out with a push of a button somewhere. I've stayed free and clear of it because it's been dropping a great deal.
Howard argued the digital asset remains tied to traditional fiat currencies and could ultimately be vulnerable to global instability or war. He also suggested that Bitcoin's value depends on the US dollar and the broader financial system. Howard told Bet David he has chosen to stay free and clear of both Bitcoin and crypto altogether. Now, those comments quickly spread online, largely because they reflect one of the most common misconceptions about the network. Bitcoin isn't a company, a server, or an app that could be switched off by a central authority. It's open source code running on tens of thousands of computers distributed around the world. And for those of you at home, moments like this highlight something very important. Even highly successful public figures are still misunderstanding how the technology actually works, which is usually a sign the adoption curve is still early. All right, we're bringing back Mike. Mike, actor Terrence Howard recently told us a lot of things, including that there's a button that I can push that stops Bitcoin. And he also said he believes that Bitcoin could be wiped out with the push of this button somewhere. When you hear something like that, what is it telling you about how many people still misunderstand how Bitcoin actually works? Because he just sounded silly. What was your take from this one?
That's like, so, 2017, 2015, 18 maybe, to hear that he has no idea what he's talking about, and it's just funny, those old clips of Jamie Dimon, who absolutely knew what he was talking about and absolutely knew how Bitcoin worked, just saying the most ridiculous things about Satoshi, and it can all just vanish, and just people have no idea. And I think it was interesting because the interviewer there, I've seen some episodes of that PBD podcast. He was almost shocked. Like, he's certainly a Bitcoiner. Like, he couldn't believe what he was hearing. And I mean, it's just silly to hear some people. It'd be one thing to say, listen, I don't know enough about it.
Yeah.
But to come out on record and just, Bitcoin's died over 500 times already.
Right.
And I don't know. It's kind of funny. But look, these are what you see when at the bottom. Right. This is what you actually want to see right now. When you have, is it CNBTC all day long with Bitcoin, this and that, and everything's at the highest, and whatever celebrity of the day is talking about, how great Bitcoin is, and they have their own crypto, and, Scottie Pippen met Satoshi back in the 90s or whatever he said. But this is what you want to see towards the bottom. This is kind of like a good indicator that things are flipping around.
Yeah, I think you're right. I think when the boo birds get a little emboldened, that the end might finally be near. And I don't know if you've caught, Terrence Howard was on Rogan like last year or something. That dude was talking like he was on some like ayahuasca trip. He's a little nutty out there. I wouldn't take much into account with regards to what he has to say. But he also did argue, for the sake of conversation, that Bitcoin ultimately depends on the US dollar to have value. What are your thoughts on that? I'd love to hear those, Mike.
I mean, I wish they would have double clicked into that point on the show, because again, what does that even mean? And what does that even mean? And what are some of the alternatives there? And, what is he investing in? What is his preferred store of value? I mean, I would be nice to hear, his alternative for how he's protecting. I mean, sounds like he's kind of anti-fiat, right? I mean, it kind of sounds like he's coming from an anti-fiat stance. So what is he doing? Is he a real estate guy? Is he a precious metals guy? I mean, he's got T-bills. I mean, who the heck knows? So I don't know. Maybe I'll have to watch the whole thing, and maybe they go into it because everyone's just circulating that clip.
Yeah, I think I remember hearing on the Rogan podcast, he claims to have like 200 scientific patents. So I think, weirdly enough, he's a patent guy. I didn't know those were investor guys, but he's a patent guy. So I don't know. It was worth watching. It was wild. But, it also begs kind of a bigger question here, Mike, because we hear famous people come out and they criticize Bitcoin, and naturally those video clips go very viral. And then suddenly we got millions of people talking about Bitcoin. So my question is, do moments like this actually help the Bitcoin in the end, because it's getting it into the narrative again and people are talking about it? Or are celebrities pushing this garbage about something they clearly don't understand? Is that bad for the narrative? So do you think interviews like this basically are a net gain, or are they a net loss for Bitcoin?
Well, I think most of the celebrities and misinformation is actually behind us. It was years ago where it was, rat poison. and you had Warren Buffett and all of these people out every day, and Obama saying, "Oh, we can't just have people with a Swiss bank in their pocket with Bitcoin." You know, that famous quote that he had. You know, you had a lot. That's actually true. It's not actually misinformation, but you know, I don't think that most celebrities and people out there are really spreading the kind of nonsense that Terrence was speaking on that podcast. I think that this is kind of an anomaly. I mean,
Okay.
I'm not really seeing this stuff on a daily basis. I think that a lot of it
True.
is kind of behind. And you know, I don't know. I mean, if you believe what the news and what everyone says, if you believe the headlines, if you believe everything that you read, if you're one of those type of people, then maybe hearing it from this clearly non-expert who has no idea what he's talking about, at least with Bitcoin, you know, probably knows a lot about a lot of other things. But
Sure.
if you listen, if you're going to listen to someone like that, and if you're going to believe what they say, then maybe that would keep you out, you know. But luckily, you know, Sailor's buying double the Bitcoin every day that is even being mined. So, you know, the people
True.
who know what they're doing are eating it up. So that's really the what matters.
And you know, Mike, you're someone who's invested in a lot of Bitcoin companies through your through Lightning Ventures. So I'd be curious, when you're talking to people who are new to Bitcoin, what do you feel like is still the most common misunderstanding that you're hearing from these people? Is it the same old story, or has that narrative maybe shifted a little bit over time? What are the usual things that people are saying when they're saying, I don't believe in this Bitcoin stuff? Is it the same as always, or is it changing at all?
It's the same old story, but even when you think it's not the same old story, you're constantly reminded that it is. Like I stopped, you know, the soapbox buy Bitcoin stuff long ago. I don't really do that, but you get into a conversation with an Uber driver, and it's amazing how many people still think, you know, do not realize it's divisible to 8 decimal places. You know, it's unbelievable how many people still think, well, I can't, it's too expensive, I can't afford it. You know, and that type of narrative is it's going to take a lot, and it comes back to the whole we're so early, right? No, we're not early Bitcoin, but we are so early, you know. And then it comes down to unit bias, right? Where people they end up onboarding to some exchange, not one of the ones that we've invested in, because those companies only sell Bitcoin, right? So there's no confusion there. But you get on board if somebody says, "Oh man, you got to get on a Binance to buy some Bitcoin," or whatever the exchange is that sells all these other assets, and then you're skewed, right? Because I can buy $1,000 worth of Bitcoin and I can have X amount of Sats, or I can buy a whole bunch of this other thing, right? So the unit bias is still very real. And then it's a lot of the other stuff. It's all the stuff that we dealt with in the very beginning. What happens if the internet goes out? Okay, quantum computing is a new one. Nobody was talking about quantum computing, you know, 10 plus years ago as a threat. Or, you know, what if the CIA, and now you have the Epstein stuff, which is total nonsense. So you have,
I heard he's Satoshi.
you have some new stuff now. You have some new FUD coming in the mix, but it really is a lot of the same. And it probably will continue to be.
Yeah. Let me ask you this, Mike, as someone who's been plugged into the Bitcoin ecosystem for some time now, how come there isn't, or maybe there is, why hasn't somebody created like a Bitcoin 10 commandments, like a factual page that everybody in the Bitcoin community can give to each other? These are facts about Bitcoin that clear up any misinformation. Is there something like that that already exists of some kind? Because there's still so much misinformation out there. I'd be curious if that would help kind of move the needle a little bit to clear up some of these misunderstandings about Bitcoin. Do you know of anything like that currently?
The problem is there's just so many of them, and there isn't one sort of universal Moses tablets. You know, if Sailor comes down from the mountain, or if Satoshi came down from the mountain with the 10 utterances or commandments on the tablets, you know, that would be a little bit different. But pretty much all of these Bitcoin only exchanges like Swan and Relay, you know, they all have great PDFs and materials and things. But unfortunately in Bitcoin, you know, no one can agree on anything. That's the thing. So you start talking about those 10 rules, and now you want to talk about self-custody and cold storage and all of these other things. And then, you know, and while that is super important, if you're just getting into Bitcoin for the first time, you want to get $500 worth of Bitcoin, and you're learning about elliptic curve conversions and mnemonic seed phrases, and I can't store this online, and what am I going to do with these words? And it's kind of, and those a lot of people think that's in the Ten Commandments, right? Like we need to start with self-custody, right? Rather than, why don't you just sign up for Strike or Swan and buy $100 a week, and then once you have enough that you got to think about, maybe then you can start worrying about your own self-custody. So I just don't think that people can agree on it, but it's a great initiative. It would be great.
Right. I almost think of it as like if Michael Saylor came down and then maybe remember when Firefest came out and everybody did the orange tiles for Firefest? I would like to see Michael Saylor create this list. It has nothing to do with self-custody. It's just like there's only 21 million that can ever be created. It cannot inflate. Like the important things that draw those distinctions that we suffer from with regular fiat currency. And then all the Bitcoiners just start posting it on their things. I think that something like that wouldn't be that hard to do if Michael Saylor took the initiative. I know Bitcoiners would likely get on board. I'd be curious to see what kind of action that would drum up in the community, something like that. But like you're right, if there's too many people kind of saying that, nobody's going to listen. We need one figure, and Michael Saylor probably is that guy, or maybe like an Adam Back type or something. But you make good points. Now, while we're still on Bitcoin, I kind of want to shift our topic of conversation here into this recent milestone that Bitcoin achieved as the network recently crossed over 20 million coins that were mined, which means more than 95% of all Bitcoin that will ever exist is already out there. So my question for you, Mike, is why is that such a big milestone in the story of Bitcoin? Is it the very fact that we got this far 17 years later, that they're almost mined? Is it a testament to Bitcoin's resilience? What do you make of it?
I mean, 17 years to mine the first 20 million Bitcoin, and, now only just another 114 to mine the last 1 million. So, when you think about, just as you were saying, that there can only be 21 million, and when you think about how much of those have already been mined, and are out there, and then forget about how many are lost, right? Is it 4 million? Is it 6 million? Is it somewhere in between?
Yeah.
I mean, forget about that. But, it's the most provably scarceable asset in history. And it's definitely a milestone. I mean, it's like 95%, I think, of all that are going to be created. And I know personally, my home miners, there's one right behind me there, are going to be on for the next 114 years. I'm going to be going after it. I'm going after every block with my 60 terahash spread out. We're going to see what we can do. It's the most fun lottery ticket ever. Never play Powerball again. Just get a little unit and just fire it up, and it's your Powerball every 10 minutes.
Oh man, are you operating a single miner then? You're not part of a pool?
No, yeah, it's solo mining myself, but I have probably 10 to 13 of them, and I just leave them in my friends' apartments. And I just say, look, if it hits, I'll cut you in on it. But I've been put one in my mom's house. She's like, "What is this thing?" I'm like, "Don't worry about it. Just leave it there."
Yeah.
Let me know if
you
it
said
starts
13.
flashing.
That's got to be a pretty hefty electric bill, no?
No, they're actually pretty cheap. They make them they're very affordable now. Like they've come a long way. They've come a long way with a little desktop thing that can sit on your desk. I actually think they market some of them as heaters to evade some of the tariffs, by the way.
Oh, that's smart. Yeah, I used to have a way long time ago, it was a Antminer S9, I think it was called. And man, that thing, holy God, did that thing get hot. I don't miss those. It was loud. I don't miss that. I hope your friends got them in like a soundproof area, because those were not fun to be around. And another thing, I got a question for you. We're talking about this milestone of 95% of all the Bitcoins ever being mined have been mined. In terms of Bitcoin's evolution, what do you feel like has been the most important milestone that you would judge? Like, would it be, it could be something like strategy, starting to buy Bitcoin, starting the institutional Bitcoin adoption. It could be the announcement of the strategic Bitcoin reserve, where a lot hasn't really happened yet. What do you think has been the most significant development in the last 5 years that we've seen from the Bitcoin ecosystem, this most recent milestone aside?
In the last, I don't know, a little bit longer than 5 years, but the user activated soft fork that brought us SegWit and eventually the Lightning Network, that was probably the most fun period of Bitcoin, as far as like a somewhat heated time. That really led to what we're seeing today. And, Bitcoin is very cheap to use right now. There's a lot of people who will tell you that that's because Bitcoin is failing. and nobody's using it. There's a lot of people who will point to Lightning Network growth, or people running into some of these derivative products and ETFs and other things to get exposure and do other things. It's kind of, alleviating the mempool. But you can get a Bitcoin transaction in very affordably at this point in time.
Yeah.
What else happened? I mean, as far as I thought you were talking about more so innovations rather than treasury
anything,
companies.
No, I think anything can be kind of dictated as necessarily a milestone, right? If it's big for the Bitcoin ecosystem. So I think an innovation would work if you're talking about Lightning. Yeah.
Well, to your point about the treasuries and the companies, seeing some of these corporates like Steak and Shake, or companies like GameStop, or what Square is doing, kind of eliminating fees and allowing 12 million terminals to click a button and accept Bitcoin for their business. I mean, these are all huge. It's all coming. But this last piece of legislation that's kind of hanging right now is really going to be a huge deal. And everyone's, there's so many clips out there of, Kevin O'Leary and everyone else talking about the trillions, right? There's trillions on the sidelines waiting to come in. But, once that is in the rear view, it's going to be great. I mean, if you have Bitcoin in a centralized exchange, it's still complicated to deal with taxes, right? Assuming that you do taxes and pay them properly. And, but they don't really, if you buy Bitcoin on an exchange and withdraw it, a lot of times they have to treat that as a sale, because they don't know what the heck you did with it, or if you send Bitcoin in from your old cold storage wallet, and sell it there, they don't know what price you paid for it. So to get a little bit of some standardized legislation and process, because it's so easy doing your taxes with any brokerage, right? Whether it's Robinhood or Interactive Brokers, you get the standard form, and it's easy and simple, and it's not so with Bitcoin. So I think that's going to be the next real big milestone that fully legitimizes it and opens the floodgates.
Yeah, I think that makes a lot of sense. And you're talking about the legislation. I'd be curious to get your thought. At the beginning of last year, as Trump started his second term in office, we heard a lot of promises. We're going to be the crypto capital of the world, and I'm the crypto president, and Bitcoin strategic reserve, this, that, and the other. A year later, feels like a lot of those promises haven't really fully been haven't landed the way a lot of us thought they were. How have you felt about that? Do you feel like it's been a lot of bark and no bite this year, or are you still holding out? You think that things are going to kind of come more into, become a little more clear to us with what the government's going to be doing in the next year? How do you feel about what's happened so far and what hasn't happened with regards to legislation from the government?
Well, compared to the previous administration, I mean, the companies that we invested in here in the United States, even abroad, that were trying to do business here, it was ultimately impossible. I mean, the choke point was you couldn't even have an operating account. I mean, they were debanked all the time. It was nearly impossible to operate. So, the juxtaposition of coming from that into a more friendly administration with Sachs and the crypto czar, crypto and AI czar, and everything that they're doing is just much, much more favorable for the companies to operate. And it's not really that promises made weren't kept. A lot of them were. He did free Ross, which is why a lot of people, voted for Trump. He also, campaigned on being a peace president, which he was during his first term. I think he was. We didn't have a president with
the case this time.
We didn't have a president with no wars until Trump for, I want to say, like 3 decades or more. And that really didn't happen. So, and now. I think the U.S. is kind of the crypto capital. I mean, if you look, I mean, what else could challenge the United States? I mean, I guess you can talk about China with a lot of their miners. If you put together Antpool and Friends, that's a pretty significant chunk of the hash power. But if you want to talk about innovation, I mean, even in the stable coins, in which I'm not saying it's good or bad, but companies like
Yeah.
Circle, companies like Coinbase, Robinhood, like everything that you see in this is all, it all comes from the US, right? I mean, Tether's
Yeah.
overseas, and certainly there are others that are not, but I think the US remains kind of at the forefront
Mhm.
of industry and innovation for many sectors, right? And Bitcoin
Yeah.
and crypto, I don't think are going to be different.
Yeah. And, I agree with you totally. It's definitely a night and day difference from what we saw in the previous administration. But with that being said, do you at all feel like, I mean, do you feel like the expectations you had at the beginning of the year from what you heard from the president and his legislation have been met up and through this point? Yes, it is better than it was from the previous administration. But like, if you had to rate 1 out of 10, how fulfilled you feel with the expectations that were given at the beginning of the year being met to this point, like where would you land on that?
Is that broadly with campaign promises or just specifically for Bitcoin and
For Bitcoin, let's keep it to Bitcoin crypto ecosystem. Yeah.
I mean, the big one is the strategic reserve, right? That's kind of the
Right.
one that everyone was expecting. And did that happen? Moving some coins and then agreeing to not sell them,
Hmm.
agreeing to do budget neutral strategies to acquire, right? Which is basically confiscation
Hmm.
from whether it's illegal activities, criminals, other countries. Who knows what's going to happen with Iran's
Hmm.
Bitcoin? And they have quite a bit over there, I believe.
Right.
But I mean, so is that kind of a strategic reserve? Um, I would say I'm generally pleased with the
Yeah.
regulatory environment and, Senator Lummis and a lot of
Hmm.
the, even Ted Cruz with energy in Texas, they get
Hmm.
Bitcoin, they get energy, and there aren't really, I'm generally pleased.
Okay, yeah. No, I think your statement would probably be echoed by most people in the community. I think it's one of those things we as humans expect and want things to happen faster than they likely will. And I myself, I think, was caught up with a lot of those expectations that seemingly were set at the beginning of last year. And the Bitcoin price certainly hasn't helped that narrative per se. I think it's down still from when he entered office, but it does feel like the foundational blocks of Bitcoin are a lot better than they were under the previous administration. So I get what you're saying, but I can't help but be a little disappointed because I had big expectations. I thought we'd be at 200 right now, but I guess we'll have to wait a little longer. But with that being said, Mike, we're going to have to wait a little longer till the next time you join us on the show. But in the meantime, what are you up to over at Thunder Funder and Bitcoin Lightning Ventures? What's the team up to? Any exciting stuff you want to report? And let us know where our audience can go check out whatever you're up to.
All right, all right. Well, we are launching a new platform. It's going to be super
Ooh.
cool and super fun. And that is a new upcoming Lightning Ventures investing portal. So if you are a founder, if you are a company, if you were an early employee looking to maybe get rid of some stock or do a secondary sale or something like that, you're going to have a new fun platform where you can invest in the best Bitcoin startups and Bitcoin only startups in the globe. So previously we ran
Nice.
that on another platform. We're building our own in-house where you can use Bitcoin to actually invest. These are real investments into early stage, get started with angel investing and all that good stuff. So that's really our main focus is the new Lightning Ventures platform that we should have out by May is what the developers say. So we're really kind of heads down, quiet in our stealth lab working on that.
Mhm.
Thunder Funder is a FINRA registered crowdfunding portal. So that is where anyone, whether you're accredited or not, you can go out and you can invest in open source and Bitcoin startups. And quite frankly, just like a lot of the markets and things that you see out there, things have been slow. Things have been a little crazy. So we are kind of in pilot light mode. We've got everything ready there for this bull market. Maybe we'll have some Roxom shares. I've talked to Borja and some of them about it as well. Hopefully we can do a good offering on there as well. But those are our two vehicles. We have Lightning Ventures and Thunder Funder, and stay tuned because we got a lot of fun stuff coming.
Amazing. I love fun stuff, especially fun investing stuff. So, Mike, thank you so much for sharing all that info with us. And guys, check them out online if you haven't already. It's all good stuff. And Mike, you always got some of the best hot takes in the business. What's the best place I can send our audience to see what you're just generally talking about or up to over on X? What's your handle?
I guess on X, I wish I was more active. It's just my name. It's Mike Jarmuz, Jarmuz. But check out LTNG Ventures. If you Google that, you'll find a whole bunch of stuff about that.
All right. Well, we want more hot takes, Mike. So I'm going to speak for everybody. I'll be checking that X account next time, and I'm going to hold you to it. But I want to thank you so much for your time this morning, Mike. It's always a pleasure getting to talk shop with you. And I hope you have a great start to your week, my friend. Happy Monday.
Thanks, Hank. You too, man. Thank you.
Pleasure's mine. All right. Thanks, Mike. See you next time, bud. All right, we're taking a break here at Roxom TV News, and when we're back, we're jumping into hour 2 of this morning's programming. So stay tuned. More news coming your way after this.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back to Roxom TV News. We're jumping into the second hour of today's story, so let's get into it. As Iran has a new supreme leader, and it's a familiar last name. Mojtaba Khamenei, the 56-year-old son of the recently killed supreme leader Ayatollah Ali Khamenei, has been selected as Iran's third supreme leader since the 1979 revolution. Now, the decision came from the Assembly of Experts after what insiders described as intense pressure from the Islamic Revolutionary Guard Corps. The vote reportedly happened online, and several members privately described the process as unnatural, which is diplomatic language for this was probably decided before the meeting even started. Mojtaba has never held elected office and has never delivered a public speech. But U.S. diplomatic cables previously described him as the power behind the robes, a man who has spent decades quietly building influence inside Iran's security apparatus. Only hours after the announcement, Iran launched new attacks on Israeli and Gulf targets. Oil markets reacted instantly. Brent crude briefly surged to nearly $120 a barrel before settling around $105. Gas prices in the United States have already climbed about 16% in a week, and President Donald Trump has described the surge as a very small price to pay, while critics argue that rising energy costs will hit consumers far beyond the battlefield. And for those of you watching at home, the takeaway here is simple. Leadership transitions in countries sitting on major oil reserves tend to move global markets almost immediately. And when that transition happens during an active regional conflict, the ripple effects show up everywhere, from stock markets to the gas pump. The G7 finance ministers are meeting this week in London, and the global leaders are now scrambling to calm oil markets that have been jumping around like a caffeinated kangaroo. Officials are discussing a coordinated release of emergency oil reserves through the International Energy Agency, a move designed to push more crude onto the market and hopefully cool prices. The last time something like this happened was in 2022 after Russia invaded Ukraine. You see, the United States still holds roughly 400 million barrels in its strategic petroleum reserve. And that sounds like a lot, but the reserve can hold about 700 million barrels at full capacity, meaning it's already been significantly drawn down over the past few years. China has already signaled it may take necessary measures to protect its own energy supply, which is usually diplomatic shorthand for we are watching this very closely. But here's the problem that policymakers are currently wrestling with. The current shock in oil prices isn't purely about supply numbers on paper. In fact, it's about critical shipping choke points in the Middle East being effectively shut, and nobody knows how long that disruption will last. This matters because strategic reserves can stabilize markets temporarily, but they don't fix underlying geopolitical conflicts. And when oil markets are reacting to war headlines in real time, even small developments can move prices that affect the entire global economy. Over in Norway, police are investigating a small explosion outside the United States Embassy. Authorities say the Sunday morning blast caused minor damage, but fortunately no injuries, which is about the best possible outcome when something explodes outside a diplomatic compound. Police say it's natural to view this in the context of the current security situation, and they are treating it as a possible deliberate attack on the embassy itself. Images released by investigators show a single suspect dressed entirely in black carrying a backpack, which unfortunately is not exactly a rare fashion choice in Northern Europe. No arrests have been made yet, and officials have not confirmed a motive, but the broader backdrop here matters. You see, anti-war protests have recently spread across several European capitals as tensions in the Middle East escalate. And incidents like this tend to amplify the sense that America's political and military decisions are being felt well beyond Washington. Police in New York City are investigating after an explosive device was thrown outside Mayor Mamdani's home. The incident happened on Saturday after a 20-person anti-Islam protest formed outside the home of New York City's first Muslim mayor. A 125-person counter-protest also formed, and as tensions escalated, the explosive was thrown. The NYPD confirmed the device was not a hoax or a smoke bomb, but a real explosive capable of causing serious injury or even death. 2 Pennsylvania men are currently in custody, and the FBI is investigating this as ISIS-inspired terrorism. Now, Mamdani has condemned both the protest and the violence, and we'll keep you up to date with this story as we learn more. Over in Nepal, a political movement led by a former rapper is on track for a landslide victory in the country's parliamentary elections. Balendra Shah, a rapper turned politician and former mayor of Kathmandu, leads the Rashtriya Swatantra Party, or National Independent Party, which appears poised to dominate parliament. Now, the party has already secured more than 100 of the 165 directly elected seats in the lower house and is leading in several other counties as counting continues. And that's a remarkable rise for a political party that only formed just 4 years ago. Its momentum comes after youth-led protests last year that toppled the long-standing political leadership, fueled by anger over corruption, poor governance, and a government attempt to ban social media. Those protests ultimately forced out former Prime Minister Kagda Prasad Ali. If current results hold, Shah's party will have enough seats to form the next government. We're taking a quick break here at Roxom TV News, but when we're back, we're going to take a deep dive into what is going in Iran with their latest new leader being put in charge after the death of the Ayatollah. More on that coming up your way on Roxom TV right after this quick break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to Roxom TV News. Iran now has a new supreme leader, and if anyone was hoping that a leadership transition might slow the conflict down even slightly, the first hours of his rule suggest the opposite may in fact be happening. Mojtaba Khamenei, the 56-year-old son of the slain Ayatollah Ali Khamenei, was officially named Sunday as the third supreme leader in the history of the Islamic Republic. The choice itself did not exactly surprise many analysts. Mojtaba had been long viewed as a likely successor because of his deep ties to Iran's powerful Revolutionary Guard and his influence inside the political system, despite holding no elected office and maintaining a remarkably low public profile. The selection process reportedly involved heavy pressure from the Islamic Revolutionary Guard Corps, which had been contacting members of Iran's Assembly of Experts in the days leading up to the vote. And in a sign of just how unstable the situation inside the country has become, the vote itself was conducted online rather than in person, partly to avoid gathering dozens of Iran's most powerful figures in a single location while the country remains under active attack. What makes Mojtaba Khamenei such an unusual leader is that despite sitting close to the center of power for years, he has remained largely invisible to the public. He has never held elected office. He has never delivered a public national speech. And as many Iranians would struggle to identify his voice. Yet inside the regime, he has long been known as an influential operator, cultivating deep relationships within the IRGC while controlling access to his father and helping oversee political and financial networks that analysts believe stretch across multiple countries. Leaked diplomatic cables once described him as the power behind the robes. And within hours of being named supreme leader, Iran launched a fresh round of missile and drone strikes targeting Israel and locations across the Gulf. Iran's foreign minister Abbas Araghchi reinforced that stance during an appearance on NBC's Meet the Press, where he rejected calls for a ceasefire. Take a peek.
What conditions would Iran accept to bring this war to an end?
Well, actually, we are not at that point yet. Obviously, this time is different from the previous time. Last time we accepted the ceasefire, but this time is quite different, and the reason is obvious. People have been killed, places have been destroyed, and now they want to ask for a ceasefire again. Well, this doesn't work like this. So there should be a permanent end of the war.
Now, at this point, the war's human toll continues rising rapidly. You see, more than 1,200 people have reportedly been killed in Iran. Nearly 400 have died in Lebanon. 11 people have been killed in Israel. And U.S. service members have also died in the conflict. But the battlefield is no longer limited to traditional military targets. You see, global energy markets reacted themselves immediately to the escalation. Brent crude surged to nearly $120 per barrel, marking the largest single-day dollar gain in Brent futures trading history and sending shockwaves through global markets. Prices later pulled back slightly after reports that G7 finance ministers may release emergency oil reserves. But the underlying issue is not simply supply. In fact, it's geography. Roughly 20% of the world's oil supply normally passes through the Strait of Hormuz, and tanker traffic there has slowed dramatically as the war continues to intensify. Israel's strike on Iranian oil depots in Tehran added to that volatility. Take a look at that disaster. President Trump responded to the surge in oil prices by saying that surging oil is a very small price to pay for the USA and world safety and peace. Only fools would think differently. That last part was in all caps. Meanwhile, gas prices in the United States have already jumped about 16% in a week. Markets across Asia plunged today, while Dow futures fell sharply before the opening bell. Another development that raised alarms across NATO happened over Turkish airspace. You see, for the second time in 5 days, NATO air defense systems intercepted and destroyed a ballistic missile fired from Iran that entered Turkish territory. Debris reportedly fell in rural fields roughly 200 kilometers from a major NATO installation in southern Turkey. And the situation creates a complicated dilemma for the alliance. Under NATO's founding treaty, an attack on one member is supposed to be treated as an attack on all. But invoking Article 5, while the United States is already engaged in a regional war with Iran, could dramatically expand the conflict. So instead, the response so far has been carefully calibrated. Intercept the missiles, issue diplomatic warnings, and avoid formally declaring the incident as an attack. Now, while oil markets have captured most of the headlines here, another development may be even more consequential to this story. You see, Iran has begun targeting infrastructure that keeps civilian life functioning across the Gulf. Over the weekend, Iranian drones struck a desalination facility in Bahrain, a country that relies almost entirely on desalinated seawater for its drinking supply. Saudi Arabia reported casualties after a projectile struck a residential area. Kuwait held funerals for 2 border guards killed in the conflict. And Qatar and the United Arab Emirates both reported incoming missile and drone threats. The strategic dilemma for Gulf states is severe. Many host U.S. military bases that support operations in the region, but those same bases make them targets. And the infrastructure now being struck, desalination plants, refineries, airports, is not simply military hardware. In fact, it is the reason millions of people can live in a desert environment in the first place, which means the war is no longer only about territory or military objectives. It is now touching the systems that sustain everyday life across the region. We're taking a quick break here at Roxom TV News. And when we're back, we're going to jump into our next deep dive of the hour, and it involves President Donald Trump and Netflix? Yeah, you heard that right, and you're going to want to stay for that and more when we return right here at Roxom TV News. So stay tuned. We'll be back right after this.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back to Roxom TV News. Our next story is one that sits right at the intersection of politics, Hollywood, and finance, which, as it turns out, is a very crowded intersection these days. You see, new financial disclosures show that while the White House was publicly questioning whether Netflix's proposed takeover of Warner Brothers Discovery would survive antitrust scrutiny, President Donald Trump was privately buying bonds issued by both companies. Okay. According to filings reviewed by Reuters and Bloomberg, Trump purchased between $1.1 million and $2.25 million worth of Netflix bonds across 4 trades in December and January, right as the bidding battle between Netflix and Paramount Skydance for control of Warner Brothers Discovery was reaching its peak. At roughly the same time, Trump also bought between $500,000 and $1 million worth of Warner Brothers Discovery bonds in 2 trades in mid-December. Both positions, incidentally, are currently profitable. Who would have thunk? The Netflix bonds were trading just above par, roughly $1.03 to $1.04 on the dollar when they were purchased. The Warner Brothers Discovery bonds were trading lower at around 91 to 92 cents on the dollar and have since climbed closer to 95 cents. Now, the White House says none of this was directed by Trump personally. Officials say the president's investment portfolio is handled independently by outside institutions and that neither Trump nor his family has any input on individual trades. Which, to be fair, is a standard explanation used by many elected officials who would prefer their investment statements not become the lead story on financial news. Still, the timeline is what makes this situation interesting. You see, Netflix announced its $82.7 billion bid for Warner Brothers Discovery back on December 5th. Trump purchased bonds in both companies roughly a week later on December 12th and 16th. Shortly after that, he began publicly raising concerns about the deal, telling reporters that Netflix's growing market power could be a problem, and suggesting he might personally be involved in the decision on whether the merger should be approved. His administration also pressured Netflix to remove board member Susan Rice, a former Obama national security advisor. And in February, Trump posted on Truth Social that Netflix would pay the consequences if she was not removed immediately. He later told NBC that he would not personally participate in the Justice Department's antitrust review, which effectively reversed his earlier comments. So publicly, there was pressure. There were antitrust questions. There were political threats. And privately, the president's portfolio still held bonds issued by the very companies at the center of the fight. In the end, the deal itself collapsed, and ironically, the company that supposedly lost the bidding war may have come out looking like the real winner. Because after Netflix walked away from the acquisition, its stock surged 12.4% the next trading day. The market's verdict was immediate. Walking away from the deal was probably the smartest move available. Instead of absorbing Warner Brothers Discovery's debt and integration challenges, Netflix collected a $2.8 billion breakup fee, kept its investment-grade credit rating, resumed a $15 billion stock buyback program, and reaffirmed a $20 billion content budget for 2026. Or, in other words, the company that lost the bidding war has now the cleanest balance sheet, the most financial flexibility, and a stock price rallying while much of the global market is wobbling. Meanwhile, Paramount Skydance now owns Warner Brothers Discovery and inherits more than $85 billion in combined debt, along with the small logistical challenge of integrating two enormous media companies during a period when oil prices are surging and interest rates may remain high. Good luck refinancing that. The lesson here is not new, but markets have a funny way of relearning it over and over again. In a bidding war, the real winner is often the one that walks away. Netflix, like as I mentioned, just collected $2.8 billion for not doing the deal, used some of that breathing room to pursue other projects, including an AI venture with Ben Affleck, and resume buying back its own shares. Like I said, sometimes the best deal in the business is the one that you decide not to make. All right, we're going to take a quick break here at RoxomTV News, but when we're back, we got more of the day's top news stories to go over, so stay tuned. We'll be back with those and others right after this.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to RoxomTV News. Our next story brings us to the Ukraine, where rescuers spent the weekend digging through rubble after a Russian missile slammed into a residential apartment building overnight in Kharkiv. The strike killed at least 10 people, including 2 children, and injured more than a dozen others after a ballistics missile hit the 5-story building in Ukraine's second largest city. Emergency crews have been combing through debris looking for survivors, with officials warning that more victims could still be trapped underneath the collapsed structure. Ukraine's President Volodymyr Zelensky said Russia launched 29 missiles and roughly 480 drones during the overnight assault, many of them Iranian-designed Shahed drones. Ukrainian air defenses reportedly intercepted the majority of those drones and about 19 of the missiles, but several still got through, damaging energy infrastructure in Kiev and rail lines in other regions, while nearby Poland scrambled aircraft to protect its own airspace as a precaution. Now, the timing here is notable. Peace negotiations that had been slowly inching forward have stalled as global attention shifts toward the escalating conflict in the Middle East. And for those of you watching at home, the reality is that when one major war dominates headlines, another ongoing war rarely pauses out of courtesy. And for the people living in cities like Kharkiv, the danger continues whether the world is watching closely or not. Anthropic is suing the Pentagon after the Department of Defense designated it as a supply chain risk to national security. a label previously reserved for foreign adversaries, particularly Chinese military firms. You see, Anthropic says the designation is legally unsound, claiming the government is retaliating after Anthropic refused to grant the Pentagon unrestricted access to their AI, which the company was concerned could be used for autonomous weapons and mass surveillance. Lawfare, a leading national security legal analysis publication, says the Pentagon's case likely won't survive in court. Moving on to Wall Street, stress is spreading through the private credit market as a massive corner of finance that usually operates quietly behind the scenes. BlackRock recently capped withdrawals from its $26 billion HPS corporate lending fund after investors requested about $1.2 billion in redemptions. The firm limited payouts to roughly 5% of assets, leaving many investors unable to access their money immediately. At nearly the same time, Blue Owl Capital halted withdrawals entirely from one of its retail private credit funds, saying that investors will instead receive capital gradually as loans are repaid or assets are sold. Markets quickly reacted. Shares of a major alternative asset managers, including KKR, Apollo, Ares, Carlyle, and TPG, fell roughly 4 to 6% in a single trading session. And for those of you tuning in at home, this episode highlights a basic feature of traditional finance. When stress hits certain investment funds, managers can restrict withdrawals to prevent a broader collapse. And suddenly, everyone remembers that liquidity, in fact, matters. Bitcoin has passed one of its most important milestones this week as it's officially crossed 20 million coins in circulation, leaving only about 1 million Bitcoin left to be mined out of the fixed 21 million supply cap. Now, that means more than 95% of all Bitcoin that will ever exist has already been issued, and new supply is now extremely limited. After the April 2024 halving, the block reward dropped to 3.125 Bitcoin per block, meaning only about 450 new Bitcoin enter circulation each day worldwide. The final fraction of a Bitcoin isn't expected to be mined until around the year 2140. And for those of you mining your own Bitcoin at home, this milestone highlights one of Bitcoin's defining features. Unlike traditional currencies where supply can expand whenever governments decide it should, Bitcoin's issuance schedule is written directly into its code. And with each halving cycle, the remaining supply becomes slower and harder to produce. British politician Nigel Farage is making a new bet tied to Bitcoin, though not exactly in the way that you might expect. You see, Farage recently invested about £215,000 in a London-listed Bitcoin Treasury company called StackBTC, alongside crypto infrastructure firm blockchain.com. Now, the investment gives Farage roughly a 6% stake in the small public company. StackBTC trades on the Aquis exchange and currently holds about 21 Bitcoin, worth a little over £1 million. Now, the firm's strategy is to acquire cash-flowing businesses and reinvest those profits into accumulating Bitcoin over time. The company is chaired by former UK Chancellor Kwasi Kwarteng, who welcomed the investment. Now, Kwarteng said, and I quote, "We are delighted to welcome Nigel Farage and blockchain.com as strategic investors in Stack." Nigel's long-standing support for British business and his belief that Bitcoin will play an expanding role in global finance align closely with our own vision. And for those of you watching at home, the interesting twist here is that Farage didn't buy Bitcoin directly. He actually bought shares in a company that buys Bitcoin, which raises an obvious question many Bitcoin advocates like to ask. If the goal is exposure to Bitcoin, why not simply hold the asset itself? Next up, actor Terrence Howard is drawing attention for his latest take on Bitcoin. Speaking on the PBD podcast, Howard said he believes Bitcoin could be wiped out with the push of a button somewhere. See for yourself.
Bitcoin is going to die. I don't mess with it.
You think Bitcoin is going to die?
Oh.
You touch nothing with crypto?
I don't touch it.
Tell me why you think it's going to.
Well, I just got a call from somebody a couple of days ago and said, "Hey, if you got 25 million, you can make 75,000. I just want to put it inside of an account to do some stuff." And this is a friend of mine, and I was like, "Do you realize that Bitcoin is still based on fiat? It's still and because the dollar is decreasing in its value, because the uncertainty of war around." Nobody wants their money in something that can be wiped out with a push of a button somewhere. I've stayed free and clear of it because it's been dropping a great deal.
Howard's comments quickly spread online, largely because they reflect one of the most common misconceptions about the network. Bitcoin isn't a company, a server, or an app that can be switched off by a central authority. It's an open source code running on tens of thousands of computers distributed around the world. And I want to give you my quick take on this one before we go to break, because this is silly. How much rubber cement was this guy snacking on before this interview, guys? Let's be real. This is another example of someone in the public, in the limelight, talking about things they clearly don't know about. If you want further proof of that, check out Terrence Howard's interview on the Joe Rogan podcast. It's absolutely batshit insane, just like everything we're hearing him talk about here. This is somebody who's just talking about Bitcoin because it's a buzzword, because it gets clicks, while actually having no real knowledge of what Bitcoin is, what it does, or what it's going to be in the future. So while I do love the name Bitcoin being pumped around the televisions and the radios and the TikToks, I don't like it when it's spreading false narratives about a product that's literally helping fix the monetary policy that we're seeing collapse around us, because let's be real, fiat just isn't cutting it anymore, guys. So please, for all of our viewers out there, don't be listening to this stuff just because they put a microphone in this guy's face. He doesn't know what he's talking about. And, you're better than that. We're going to take a quick break here at Roxom TV News, but when we're back in, we have more of this morning's top news stories and none of this anti-Bitcoin, I don't know what I'm talking about nonsense. So stay tuned. We'll be right back after this. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. Welcome back to Roxom TV News. Our next story takes us across global financial markets, where the economic shock from the expanding war in the Middle East is now being measured in numbers large enough to make even veteran traders stop and stare at their screens for a moment. Since the conflict with Iran began, roughly $6 trillion in global equity value has been wiped out. Bloomberg calculates that amount is equivalent to around 89 million Bitcoin, worth a market value disappearing as investors reprice the risks of a world that suddenly feels a lot less stable. Now, the immediate catalyst behind the panic has been oil. Brent crude surged toward $120 per barrel, marking the largest single-day dollar increase in Brent futures trading since the modern records began in the late 1980s. Normally, in moments like this, investors rush toward government bonds for safety. But this time, something unusual happened. Instead of rising, bonds fell. The yield on the U.S. 10-year Treasury climbed to around 4.17%, while the 2-year yield also moved higher. Or, in other words, the asset that normally stabilizes markets during crises failed to play that role this time. The reason is inflation. Oil at $120 a barrel pushes up the cost of transporting goods, producing energy, and running supply chains across the global economy. And when investors expect inflation to rise, the fixed payments promised by bonds suddenly become less attractive. You see, before the war began, the markets expected the Federal Reserve to cut interest rates later this year. Now that assumption is rapidly fading. Some traders are even floating the possibility of another rate increase if inflation pressures were to accelerate. Wall Street tends to frame this moment as though the Fed has been blindsided by geopolitical events, but critics argue the groundwork for this dilemma was laid years earlier. You see, for more than a decade, the Federal Reserve kept interest rates near zero while trillions of dollars were injected into the financial system. When inflation surged after the pandemic, officials initially described it as transitory. Now, a genuine supply shock has arrived, and there are fewer policy tools available to respond. Markets briefly stabilized after reports that G7 countries may release oil from strategic reserves, but those reserves are finite. The U.S. Strategic Petroleum Reserve currently holds roughly 400 million barrels, well below its historical capacity of around 700 million. And that matters because the underlying problem is not simply supply on paper. Roughly 20 million barrels of oil pass through the Strait of Hormuz every single day, making it one of the most critical energy choke points on the planet. If that corridor remains disrupted, temporary reserve releases can buy time, but cannot fully replace the low flow. Some analysts are already warning that oil could reach $150 a barrel if the disruption continues. And financial markets appear to be pricing a conflict that lasts longer than was initially expected. Mojtaba Khamenei's rise to power, along with Iran's rejection of ceasefire calls, has dampened the hopes of a quick diplomatic resolution. And the longer the conflict continues, the longer energy prices remain elevated. That combination, rising prices and slowing growth, is the scenario economists call stagflation. It's one of the most difficult economic environments for policymakers to manage. And judging by the way global markets reacted this week, investors are beginning to realize that the world may now be entering exactly that kind of moment. We're taking a quick break here at RoxomTV News, but when we're back, we're going to be bringing more of the day's top stories, including Kalshi and how it's expanded to Brazil. If you like prediction markets, this one's for you, so stay tuned. We'll be right back with more RoxomTV News after this.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV News. It's now time to talk about prediction markets, a corner of finance that until recently sounded like something halfway between Wall Street and a sports betting app, are now beginning to go global. Kalshi, the US-based platform that allows people to trade yes or no contracts on real-world events, has announced its first major international expansion. And it's not starting small. The company has partnered with XP Inc., Brazil's largest brokerage, which serves roughly 4.8 million active clients. Now, under the agreement, those clients will soon be able to trade prediction contracts tied to Brazilian economic indicators. Things like whether inflation reaches a certain level, whether interest rates move, or whether specific macroeconomic targets are hit. Or, in other words, instead of simply watching economic forecasts on television or reading analyst reports, traders will be able to put real money behind their view of how the economy is likely to behave. At launch, these contracts will be available through Clear Corretora, a brokerage brand owned by XP. But the way the partnership is structured is almost as interesting as the product itself. You see, rather than waiting for a brand new regulatory approval process in Brazil, the trades will initially run through international accounts routed via XP's US operations. That structure allows both companies to operate within existing regulatory frameworks, which in the world of financial innovation is often the difference between launching a product this year or 5 years from now. The timing of the move is not accidental. Brazil's securities regulator, known as the CVM, recently authorized the Sao Paulo stock exchange operator B3 to explore prediction markets structured as financial derivatives rather than gambling products. That distinction matters more than it might sound. In the United States, Kalshi operates under a similar structure as CFTC-regulated exchanges, meaning the contracts are treated as financial instruments. If Brazil follows that same regulatory model, prediction markets could enter the country through the financial system rather than the betting industry, which means different rules, different tax treatment, and perhaps most importantly, a very different level of legitimacy. You see, Kalshi itself has grown quickly over just the past few years. The company raised $300 million in a Series D funding round last October, giving it a valuation of roughly $5 billion. Major venture firms, including Andreessen Horowitz and Sequoia Capital, participated in the round, signaling that Silicon Valley increasingly views prediction markets as a serious financial product rather than a niche curiosity. At the same time as that funding round, Kalshi quietly opened its platform to users in more than 140 countries worldwide. But the partnership with XP represents something different. It's the first time Kalshi has struck a formal distribution agreement with a major foreign brokerage, effectively plugging its product directly into an established retail investor base. And Brazil is an interesting place to try it. You see, the country has a massive retail trading community, a long history of macroeconomic volatility, and a population that pays close attention to things like inflation, interest rates, and currency movements. Or in other words, the kinds of questions prediction markets specialize in answering. And prediction markets have attracted increasing attention in recent years because of one simple claim, that markets where participants risk real money on outcomes often produce better forecasts than traditional tools like opinion polls or expert models. The theory is actually pretty straightforward. When people are forced to back their beliefs with actual capital, their predictions tend to become more disciplined and information-driven. This idea gained mainstream attention during the 2024 US election, when platforms like Kalshi and Polymarket were frequently cited as producing forecasts that proved more accurate than many traditional polling models. Instead of asking people what they think might happen, prediction markets ask a slightly different question. What are people willing to bet will happen? It's a subtle difference, but a powerful one. And now that concept is starting to move beyond elections and political forecasting into broader economic questions. And Brazil, in many ways, may be the ideal environment for this type of experiment. It's a country where inflation, interest rates, and currency movements are not abstract policy debates. They are daily realities that shape how people invest, save, and run businesses. When macroeconomic conditions become part of everyday conversation, a platform that allows traders to directly speculate on those outcomes becomes less of a novelty and more of a practical financial tool. And if prediction markets gain traction there, it could provide a roadmap for expansion into other emerging markets where economic volatility is a central feature of life, which means what looks like a relatively small partnership today may actually represent something much larger. The export of a new financial idea, where collective bets of thousands of traders begin to function as a real-time forecast of the future. And if that concept proves successful outside of the United States, prediction markets may move from the edge of finance into something much closer to the mainstream. We're taking a quick break here at Roxom TV News, but when we're back, we're going to go over our final story of the day and wrap things up on this Monday, so stay tuned. We'll be right back after this quick break. All right, welcome back, everyone, to Roxom TV News. We are wrapping up today's show, but in about 30 minutes, we'll be live from South Florida, where President Donald Trump is taking center stage. The president is scheduled to address Republicans at their annual retreat at his golf resort. Lawmakers are using the gathering to discuss legislative priorities, including spending plans and strategy for advancing Trump's policy goals in Congress. Now, the event also highlights Trump's continued influence over the Republican Party, as many GOP leaders look to him for direction heading into the upcoming political fights in Washington. Supporters say the meeting is an opportunity for Republicans to unite behind a shared agenda, but critics argue holding the retreat at a property owned by Trump raises ethical concerns and could benefit the former president financially. The meeting comes after a turbulent week for the GOP conference, and you can watch Trump's remarks right here on Roxom TV in about 30 minutes, so make sure to stay tuned for that. But while you're waiting, let's make sure you do the thing in the meantime, like, follow, and subscribe to Roxom TV, Roxom TV News, and me at Hank at Roxom TV, or wherever you choose to do your scrolling. And we will be back tomorrow at our normal time of 8 a.m. PST. Mondays, we're normally on at 10 a.m. We had some scheduling snafus. Thank you, daylight savings time. But we're going to be back for our normal time the rest of the week. That's Tuesday through Friday at 8 a.m. to 10 a.m. PST right here at Roxom TV News. So thank you, everyone, so much for tuning in with us this morning. And I'll be excited to hang out with you some more tomorrow for more of the day's top news stories. So stay safe, stay informed, and I'll see you boys and girls tomorrow. Have a good one, everybody.